Welcome to the Techno Fundamental Report for January 23rd. Well, December jobs were up. They beat estimates on jobs. Now, this is a positive for the economy, because we're not in a recession. But it also can be a negative because the Fed wants the economy to cool down, and with jobs going up above expectations, it can be a problem. December inflation was a mixed bag. You can see here the CPI, 325. The core is at 290. So inflation is in a downtrend, and hopefully it can stabilize and improve. The misery index, something that Ronald Reagan developed during the campaign against Jimmy Carter, but you can see that the inflation plus the unemployment, it's kind of creeping up. So we're having a little bit of a misery index here. Biases. We all have biases. It's a real problem for investors. That's why trend following is so important, because you're just going by mathematics. So with math, you avoid biases. So let's just see what's going on here with the market. You can see here NASDAQ definitely improving here. We got that major sell-off when the Fed came out and announced that rates were not going to come down as much as expected. However, it looks like things have stabilized, and we're starting to see an upturn in that 21-day moving average. Now, on the mid caps, we're seeing improvement there as well. Now, remember, the power trend it has a certain definition, but we're not in the power trend here any longer. So it was nice while it lasted. Hopefully, we go back into a power trend. Here's New York Stock Exchange, some improvement. Here is the small caps. We are seeing improvement there. Mainly it's back above that 21-day moving average. Now, this one is important. The S&P is important, so is the NASDAQ. These are the strongest indexes. The large caps continue to pretty much dominate the market right now. Here's the equally weighted. Now, this is the S&P 500 that is not market cap weighted. Everything's equally weighted. You can see, though, we're starting to see improvement there as well. Now, the big problem here, again, is interest rates. We're seeing an increase here in mortgage rates back above 7%. Then if we look at our power index, for the last 125 days, interest rates have gone up 6.65. So that's an improvement. We're starting to see maybe the chance that interest rates are starting to stabilize here, and the market will rally on that information. Here's the main trend. The primary trend continues to be up, looks very healthy. So the long-term trend is fine. It's just getting through this short-term uncertainty about interest rates. Let's take a look at a couple of stocks here. Here's CyberArk Software. The thing to realize here, we have the trend meter, which is in a positive trend. The stock price itself is in a nice uptrend. We're above all the moving averages. We got nice volume in here that, kicked off this move, and relative strength looks good. So that's an interesting looking pattern. Here's DoorDash. Now, the thing about DoorDash is you got a real nice flat base here. Now, also, you're seeing where the buyers and the sellers have pretty much reached parity. There's not a bunch of crazy volatility. So DoorDash looks solid. Here's Intuitive Surgical. This is an old-line company, been around for a while, the Da Vinci surgical system. I was with a doctor recently and told me that this is just a very, very important technology. You can see here on earnings a gap up, and now it's trending upward. So all in all, things are looking better. If you have any questions, please let me know.